So Anna, the last month, there's been a lot of stuff going on. We saw interest rates tick under 6%, only to explode higher. We had inflation readings that were hot, CPI and PPI, but still trending down. And then we had a jobs number that was 528,000, almost 300% more than expected. And probably most importantly to me, PCE, personal consumption expenditures, broke the pattern. We are no longer going lower, it went higher. Inflation is proving to
Yes.
be stickier and harder to beat. But what the heck happened the last month?
It's been interesting. There's been quite a few adjustments to previous months' numbers, and those adjustments were not in a positive direction for us. And so I think, it's a lesson that there's a lot of things that are leading indicators and a lot of things that are lagging indicators. And we get a little too excited when we see a number that, really is lagging what's really happening. And so I think data continues to come out well after something has actually happened. And then other numbers that we see, we think they're leading indicators, but they're kind of fuzzy. And so I think consumers have been really resilient. And this is one of the things the Fed has said in the beginning is we have a strong economy, right? They're saying that's why we won't have a soft landing. But we have very low unemployment and we have a lot of job openings and had still some wage growth when you don't factor in inflation. And so all of those things make most consumers still feel okay. They're doing pretty well despite inflation, despite some costs being up. And so that has not slowed us down from buying things, services, from goods, et cetera, even though inflation is there. And so until consumers get really spooked and there's more layoffs and they start to pull back, there's still demand. And so costs are going to stay high.
Yeah. And I also remember, I think it was retail sales came out for January. They were up 1.8% in
Yeah,
nominal terms, but more importantly, they were up 1.1% in real terms,
right.
right? Inflation adjusted. And I'm like, man, Pal's job sucks. I don't want Pal's job.
Exactly. And now because basically all of these numbers were a month ago, I think we did a couple of shows on this when you looked at the four components of inflation, everything was down except for core services. So everything was starting that, disinflationary path and going down and they were actually in recessionary territory. But then you looked at services growth, which really largely is impacted by wages, and that was still strong. Now all of them are kind of coming back up again. And so Powell's going to have to, and all the Fed governors that have been talking over the last, month, whether they're voting or non-voting members, have basically said, we're going to have to go higher longer. This is a problem. And so I think we have to be prepared that, in my opinion, I said this a month ago, I didn't see any path where the Fed pivots and lowers rates this year. Now I would bet money on
Yeah.
that,
I,
that,
I would back you up. Yes.
2023 and 2024,
Yeah.
unless something breaks very quickly, in the credit markets, which we've talked about, we might be in a recession, but the Fed's not going to lower rates until they see that
Yeah.
inflation is coming down. I think we've got this stagflationary environment that I've been talking about for, a year and a half, 2 years, that continues into 2023 and maybe 2024 as well.
Yeah. Yeah, I think there's a couple of things that I've said, and like you, I'm even more confident now. The first one is I think Powell would love to break the Fed put. I think that's something he inherited,
Yeah,
because again, inflation was low, right? So when Greenspan did it, and then Bernanke and Yellen, and it's there, it's well known. I think Powell would love to put that on the shelf. So he is not cutting this year, barring something really breaking, in my
right.
opinion.
They would
Uh,
lose complete integrity because all they've said from the beginning is we will not stop until we see very clear evidence that inflation is very close to on its way back down to 2%. So
yeah.
they've told us what to expect, 2020, that they think that it's going to take till the end of 2024 to get inflation back down to 2. So
Yeah.
unless they do break something significantly, and it's a very hard landing, they're going to continue on that path. Otherwise, they've got to eat crow and backtrack, and Powell does not want to do that.
Yeah. Yeah. And then the other thing that I think Powell is a very good student of is history. And he's gone back and looked at Arthur Burns and Volcker. If
Yeah.
folks don't know who Arthur Burns was, he was the Fed president before Volcker. And also Volcker, frankly. Go back and look at the inflation charts, and it looks like, shark teeth. And a lot of that is because Volcker cut, right? He thought he beat it. He cut, and then it came back even worse.
Right.
So I think Powell is a great student of this. I think there will be a time, probably in early 2024, where inflation, maybe headline inflation, is at, I don't know, 3.8 or something. And the market is going to be screaming cut. And he's gonna stick
Yeah.
it out another quarter and go, nope.
The markets are already screaming how
Yeah.
you're going to break things. You're going to make it worse. It's going to be worse for the
Oh
markets
yeah.
if he pivots today, but it's not worse for the middle class if he pivots today, because that inflation will continue to rear its ugly head, as we talked about earlier today.
Yeah. And then the other thing is, I've actually seen a report. I think it was out of Dallas. It might have been Atlanta. Fed report talking about they're now forecasting that inflation may not get to the 2% number till 2025.
Yeah. And
2025.
all the things that I'm watching globally, and deglobalization, which is happening, in energy and food and semiconductors and other supply chain issues, those are expensive to reorder into the United States. And so I just don't see us going back to 2% inflation. I'd be really shocked. It wouldn't surprise me if at some point the Fed has to say, you know what? We might be living with slightly higher inflation, from here on out. Maybe it's 3 to 4, and maybe recession's bad enough that we kind of live with 3 to 4 as long as we can produce growth, over that. I don't see us ever going back to 2%. I hope I'm wrong, Michael, but I think this is going to be a longer battle, and I just hope they don't keep rates elevated significantly if inflation doesn't come back to 2%, at the end of 2024.
Yeah. Again, I think we've done a pretty good job on this channel trying to educate folks that inflation has three components. There's the goods, which I call the cardboard boxes. We've already gotten that. We went from 9.1 to 6.4. Sorry, folks, the easy stuff is over or almost over.
Right.
Then there's the hard, which is housing, which is delayed, which is at best going to come in August or September. And then there is, services, X housing, wages.
Mhm.
I just saw before I hit record today that Delta pilots got a 38% bump in, income or wages. And it's deglobalization, bringing manufacturing home. Yay! More
Yeah.
expensive, right? It's just
Right,
all of
right.
these things. So
And hopefully that produces a lot more GDP than what we've seen over the last, couple of years, real GDP, not from government spending, back in the United States. And so I'm hopeful that we start to have more positive growth once we get through recession. So that's a silver lining.
yeah. Again, I think back to all of this and what we do on this channel, there's tremendous opportunities coming. I think the whole entire market is slowing down. A slower market is good for me. Understand where there is great pain, there's great opportunity. Go do the work. No gambling, no speculation, no meme stocks, none of this other nonsense. Just do
Right.
the work. Control your expenses, and let's build some wealth together.
Absolutely. Yeah, and this is the time to really be focused on that, because again, if you're just looking at inflation's going to be high, interest rates are going to be high, that doesn't mean there's not deals to be done. It doesn't mean that you can't make money. It just means that it's not going to be the same way that you made money, before. And you're going to have to be patient and really play the long game, which you and I have preached on this channel over and over and over. Play the long game, play the long game. Don't, try to get, you know, 1 or 2 year bridge debt and flip properties right now, hoping that you know what the future is going to be in the next year or two. You don't. But if you
Yeah.
just keep sticking to the fundamentals and buy really great properties that meet your buy box, and cash flow and going to have some upside over the long term, there's still really good deals to be done in every single market cycle.
Absolutely. One of the good things I see coming for the next 2 years is good operators are going to be disproportionately rewarded. And all the speculators, gamblers, and folks who frankly got lucky are going to get crushed.
Yes.
Anna,
Yes.
where can people find you?
You can find me here every week and on my channel on your playlist. And you can find me on social media at Anna Kelly, REI Mom, and reimom.com.
Thank you so much.
Thank you.